Hello, this is Cryptolyze. I hope you are well. This Thursday, 11 January 2024. We meet today to obviously talk about BTC and ETF because it was a big day yesterday, and for once it went more or less correctly. Not necessarily completely because we still had a few small hiccups, but all in all we had the announcement which came last night late in the evening, but at least the ETFs, spot BTC are validated. And with that, I present to you the iShare Bitcoin Trust, which is therefore the BlackRock ETF, which has been validated with 0.25 fees or even much less. I believe it is 0.12 fees as long as we do not exceed not a certain date or 5 billion assets under management. We are still very, very far from that. We have 12 million under management for the moment, and above all, what we are going to wait for is going to be what happens next. For the moment, what is certain is that the validation was done in blood and pain, in particular for Gary Gensler, who makes it clear he does not approve or support Bitcoin in the validation of this ETF, namely that it was Gary Gensler who voted for in the 5 votes, 3 votes for, 2 votes against, but at least it is validated. That doesn't prevent us from always having this feedback from Gary Gensler, who is really anti-Ripto and even anti-TC, despite the fact that on BTC he showed himself to be a lot more conciliatory. This is not the case in any case in these statements where he does not want to let this part show through. This also implies that 2024 is going to be an intense year for crypto regulation. What can we expect from this BTC ETF in terms of developments? So on that, there is a very nice article that was produced by CoinDesk which explains 3 things to us. 1, that the market expected a lot from this validation of ETFs, and mainly from the sale and use of these ETFs, so certainly today and tomorrow in certain platforms. And it compares with the gold ETF, I already told you about it, that it was the beginning of the expansion of the price of gold. And in fact, some analysts consider that by the end of the year we should have a BTC in the region of $1 lakh, which is still quite significant when we already know a little about the state of the general market. What's important to know is that the person who will benefit the most from this is going to be Coinbase, in this case. Coinbase is therefore the happy provider of BTC protection for 8 of the ETFs, which is still significant. That means that there will be a lot of fees that will arrive at Coinbase and a lot of volume, and that will be rather positive for the platform, and also it will have market share in general. We had Coinbase, which was a little bit below there, clearly. Depending on the volume that will arrive on the different ETFs, we will have a Coinbase which will regain momentum. For me, the little thing that appeals to me will really be this notion of liquidity. When we saw the announcement, we saw what happened in terms of prices. We saw that there was relatively little movement all in all. On the other hand, what will be really important is the injection of liquidity, which will take place in the first 24-48 hours of these ETFs, from the moment they will be made available to the public. Sale. Normally, once again, I repeat it Thursday, Friday, so today, really weekend, we should have an injection of liquidity, and that is what the market expects if we are not in this injection of liquidity, or in any case in below what is expected at the market level, we will have a correction which will be relatively steep. However, there is something that interests me. It is Robinhood's position in relation to these BTC ETFs. They really want to list it as quickly as possible. To remind you, Robinhood is not a platform linked to institutional investors, but rather a platform linked to retailers. This implies that these ETFs will be made available to a certain number of retailers who will be able to enter the ETF market. So, we always pay close attention when we start to get this type of news. Either we have an influx of retail and therefore an influx of liquidity linked to retail, or we find ourselves in an exit liquidity at the retail level. And therefore that means that we will have a profit taking from institutional investors already placed on the point of interest, not on the ETFs, but directly via the CME towards the retailers who will enter through the ETFs, and therefore we will have to be very careful with that. So we are not going to move on to the macro part, very little in any case, or even not at all, and we are going to go directly to the BTC and to the CM graph. So very few movements compared to validation. We had a big wick, in which we had a lot of liquidity and liquidations which took place, but overall very few reactions, in particular no explosive bullish reaction. When we look a little bit at what happened, we had here, and in this part there, in fact, the 2 wicks which started to go downwards to seek liquidity at the bottom, We had a wick which is left at midnight to restart liquidity at the top. But overall, we just cleaned up the price here and we don't have a set tone. That is to say, we don't have a break in relation to the wick which was carried out yesterday on fake news. So 48,500, which gave more or less the top. And the retracement that was done on the 44,500, okay? 48.44. Overall, we have set up a range between the two. I think we will have to be patient on the resolution that we will have it this weekend, because what is the market waiting for? Waiting for the liquids. Clearly there was no explosive reaction, and FOMO from the market because it was already more or less pricey. I had already started talking to you about it at the start of the year, to the effect that there was a big possibility that it was already priced, and here we are in fact waiting for the influx of liquidity which should arrive this weekend. And this is where it will be very interesting because we see that the market itself is really positioned in a form waiting. And if we ever find ourselves with a liquidity supply and a price reaction which is below the prospects of the people who are positioned, we will in fact have cascades of abandonment and in fact capitulation, and therefore behind liquidation. So for me, the important level to remember is going to be the 40,000, okay? As long as we are at the 40,000 level, that means we are holding on. That means we have no sell the news. That is, we can have a retracement, something which will evolve in this way before starting again for a bullish breakout a little after the halving. On the other hand, if we break the 40,000 with a consolidation below, so we will look for the gap, and we validate a weekly candle below the 40,000. There we will have a signal to go and retest the 32,000, okay? There we will have a very, very strong signal to go and retest the 32,000. So really the key level, there it will be the 40,000 if we ever have liquidity lower than what is expected. We can already see it in terms of the market reaction. It's not a reaction that is bullish. Many were in fact waiting for a wick that would potentially fetch the 60,000 or even a little higher. We see that this is not the case. Currently, the announcement effect has not taken place. At the same time, with everything that has happened, I want to tell you, it's complicated to do otherwise. We have already had enough fake news in a short time. Even yesterday, it was complicated. The market was waiting for validation. When we got the news, I can tell you that we were all waiting to really have something appear on the SEC website, for it to be confirmed by other people so that we don't have fake news again. And the market behind it has not moved at all, so that shows that we are waiting for the arrival of liquidity. And at the same time is the goal of this ETF. This ETF is to open the floodgates to liquidity that we did not have until now. So we will have to wait today and tomorrow to have this liquidity, or in any case, an impact on these liquidity. If we never have an impact, that is to say, if we never have an increase in liquidity, that means two things. It means that we will have a break behind which risks be relatively brutal. And the level, the first really level to hold, will be the 44,500. If we break the 44,500 and consolidate below, there we can directly aim for the 40,000 and precisely return to the first part of the range. Here, so we could consider that, hop, here we have the range, we have a deviation, we re-enter the range. A reintegration of the range is not positive, and there we will certainly have very strong signals on the reaction of the 40,000 which will take place. What we really expect is an injection of liquidity. An injection of liquidity means, here, if we zoom out a little, that we have the capacity to be able to gently grind the price in this way, okay? It won't necessarily be big locks. It will be a course, as we have been able to experience since November 2023. A price that will work upwards in a form of compression, expansion, compression, expansion, compression, expansion, okay? This is exactly what we want here. If we have that, it means that we have a course that is extremely well constructed and therefore we will not have any retracements. But to have that, you have to have liquidity arriving, and that's the answer. It's going to be today and tomorrow, and certainly over the next week it will take a little of time. What is interesting to note is that on the other hand, we have a dominance of BTC, which is in the process of collapsing, and which collapsed a lot in particular yesterday following the validation of the ETF. And we saw this liquidity pass on altcoins when we look a little at the outperformance here with in particular an ARB which has soared, and an ETH which has regained a little bit of momentum when we look at ETH on BTC, so which is the performance ratio of Ethereum compared to BTC. We can clearly see that we has an outperformance of Ethereum with an ETH which is at 2,500. Which in fact allows to hold a large part of the market following the uncertainty which is placed on the BTC ETF. Why do we have this? Already for several reasons, it is that we consider that the ETF itself is validated, so that means that the news effect is no longer present. It also means that potentially we can find ourselves on a BTC which will tidy up, which will be in a form of neutrality. And when we are in a form of neutrality, what is happening? Liquidity is moving from BTC to altcoins, and therefore behind it people are anticipating this movement of liquidity to altcoins to be able to gain performance. And that's a bit of what we've already seen this early in the evening yesterday and this morning. We just have to be a little careful because when we return to the total 3, which represents all the altcoins without Ethereum and BTC, we see that we have had an acceleration, yes, but we have a start. Retracement, I think today's close, and the arrival of liquidity is going to be really paramount in the overall decision of what happens at the market level. At the level of open interest, very flat, we see that the order flow does not give us any indication. In any case, gives us the indication that there is no movement, so we have no precipitation. The market is really waiting. This can also be seen in the liquidation map. We have something that is flat. We do not have a short-term positioning that is being done. And this is also seen at Kingfisher, where we have almost no shorts in position. We have a little bit of length, but it's still relatively weak. We see that the long ones are below 44,500. And the small important point is by zooming in, we look here at the CVD of the spots. We see that the CVD spots have re-accelerated well before validation. ETFs, and we see that we have a form of stabilization. And on the contrary, we have a spot CVD which grows, and a permanent CVD which breaks, so that means that we expect volatility. People do not push the mushroom, are not aggressive at the level of the perpetual, whereas on the spot we are really on the aggressive for an acceleration. Also to say on this weekend, to see if it will be validated or not. That's it for the daily. I hope you liked it. If so, don't forget to leave me a like and a comment. We meet earlier 1330 on STX, Stacks' crypto, so a protocol which is built on BTC, or in any case which leverages BTC, and this is the crypto that you selected in the video of yesterday, so we'll see each other later, 1330.